Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Wednesday, May 8th, 2019, and we are in the final hour of the trading day. This is the hour that I personally believe is the most important because the closing prices to me validate the entries of the day. I feel like the closing price of the day is the most important price of the day. So anyway, I appreciate everybody coming out today, and we had a tough day yesterday, and we're looking to print a little black ink today. So let's hope that we can do that. So far, that is the case. So, okay. So the format of today is, first of all, we're going to run the U.S. government required disclaimer. And then when we're done with that, we are going to take a look at my current positions and why I got in them and how we're going to manage them going forward. And then we're going to go through my watch list and we're going to see if there's any setups that look interesting for the rest of the day going forward. And then after the close, if there are any questions, I will do my best to answer them. So, all right. So here we go with the disclaimer. Hold on, it's 40 seconds. I will be right back.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
All righty, got that out of the way. Okay, so first of all, the market had really been sold off the last couple days because people are concerned about what's going on with the trade tariff increase. And, the market is repricing because the market was anticipating there would be a trade deal. And, now it seems a little iffy. And that's why the market sold. That's why the market sold off. It was repricing. So, I believe the trade deadline is Friday, so I'm kind of looking at this as an earnings report, and I generally don't like to get in front of stocks with their earnings. Well, not generally, I never do, but I'm kind of looking at this as this trade deal as whether it's going to go or not go. They're going to pull something out of the hat and make it work. It concerns me a little bit. Because it's a big news event. So that being what it is, let's take a look and see what's going on today with my current positions. Okay, so yesterday I did enter MasterCard, and the reason that I bought it was I liked this big reversal bar that we had. This was the day that the market opened up down significantly and then reversed. But I did like yesterday, I'll put the little thing here where we bought it. I did like yesterday that we did go down, but we held the halfway of this bar. When you have big up bars, generally, if the market is still strong, it's not uncommon to come back to halfway of that bar. And it did come back during the podcast yesterday. I said, if we hold the halfway of this bar, I will enter it. If it would have closed down here, I would not have. But it did hold this 50% mark, which was important to me. And then the RSI was still above 50, and the price did close above the 20-day moving average. So three things here. One, big bar up. We came back down. We held halfway of the bar. We rejected the 20-day moving average, and we held the 50-day moving average, or the 20-day moving average, and we held the 50 RSI. So I did feel like that there was some inherent support there, and that's why I bought it right at the close. And then you can see today it did initially go down. It tested the 20 again, reversed back up. Did hit one of my profit targets, which was nice to print a little bit of black ink after yesterday. So where am I going to get out of this to the downside? Probably a close under the 20-day would make the most sense to me. It is having some problems with currently right now, but we don't know till the end of the day really what it's going to be. But it has rejected the 10-day moving average. But going forward, if we have a close below the 20-day moving average, I will get out. If it does move our way, you can see we hit one profit target. I have a couple more above today. And if it continues to move up, I will move the profit target from the stop loss from the 20-day moving average to possibly something like the 10 or the 5, or it depends on what the price action is moving forward. So anyway, that's the plan with with MasterCard. Glad that it's moved up today. Okay, SPY. So as most of you know, I do take a SPY position every night. It's my overnight SPY SPY trade, and here I'll show you very quickly. And the reason I do this is because of this back test. Since 1993, if you would have bought the SPY on the open and sold on the close, so you buy in the morning first thing and then sell in the afternoon, you actually would have had a negative 5.2% return, which is crazy because we know 1993 the stock market's gone up. So how can that be? It is because if you did the opposite and you bought on the close and you sold on the open, the return would have been 568%. So meaning that more than all performance came in after hours trading. So, that's very significant to know that. So I have been doing this 48, 49 days now where I do buy and even 100 shares at the end of the day. I'm not saying that you should do this or you should buy 100 shares. That's just appropriate for me, with my accounts. But the green line here is the buy in the afternoon, sell in the morning. The red line is buy in the morning, sell in the afternoon. So you can see since 1993, it has definitely been a profitable trading system. It doesn't mean that it works all the time. There are drawdowns that happen on a regular basis. And, if you would have started using this here, it wouldn't look so hot. But if you'd have started using here, you would have thought it looked really, really good. But, this is a long-term. There's going to be times where it's going to go against you, like it has for me the last 3-4 days. But this is a long-term. You have to take the long-term view on it. So with that being said, I did buy SPY here at the close yesterday, but you can see it opened a little bit lower, not too much at all. About 40 cents lower. So I will be buying this again at the end of the day. I bought it a couple days ago here. Yesterday sold it here, but good thing I did sell it at the open because it did go down much further. So this has, since I've been doing it, this has outperformed the S&P by a long ways, and without having to go through all of these big moves up and down. So I'm using this as a long-term approach. I will be buying this at the end of the day. So those are the only two positions that I have. Well, actually just MasterCard. So MasterCard, and we'll buy SPY at the end of the day as well. All right, so let me see right here. So actually the Dow's up 124 points right now. NASDAQ's up 18 and the SPY's up about 9. The Dow is up about twice as much as the NASDAQ. So the Dow stocks are the ones that are benefiting today more than the S&P. More than the NASDAQ stocks. All right, let's see. Okay, well, let's take a look now and go through the watch list and see if there's anything interesting for today. Apple did rally a little bit today. That $200 mark is an important mark. Would I buy this going into today? Probably not. It's good that it's closing back above the 20-day moving average, or it currently is above the 20-day moving average. These big down bars with this big volume does scare me. And when I talked about a big bar going up and then coming down and holding halfway, well, this was a big bar down, and we're a touch higher than halfway, but not substantially. Maybe we're exactly there, actually. So it's a little concerning. I do know people that bought this yesterday and hope it goes up for them. But for me to enter a trade now after this move back up to halfway, I probably would just pass on Apple at the moment. After a loss, it's important to be clear-headed and not let your animal brain take over your emotions. When you get punched in the face or something bad happens, people go into flight or fight. And, if you have a loss, a lot of times people want to get competitive, hurry and make that loss back. But it's not a good policy. You should be even keeled, have your trading plan, stick to it. Just because you took a loss, I know you want to make it back. We all do, right? But take the long view on it, slow and steady, make the loss back over time, and don't just jump into something because you're frustrated. I actually think that's probably one of the reasons why the majority of people lose money trading. You probably all know about poker players that are great poker players, but then they get a bad beat, and they just, they go on tilt. That's why it's called, right? Go on tilt. And if you've played any poker, you've probably seen that people that play on tilt usually do not do that well. And it's the same with trading. Don't go on tilt in your trading. If you have a bad loss, just let it go. Take the long view. Continue to trade the correct way. And with the knowledge that if you're trading correctly, that you'll make it back eventually. But to try to do it all in one moment is just a recipe for disaster most of the time. All right, so Amgen, I did buy Amgen here when we went below the third ATR channel, this thick line here, and closed back above, and we also closed back above this previous range. I did scale out about 20%, but then yesterday I lost the support of this previous range when we closed back below. So I did get out yesterday for a loss, but I phase, and it really helps because even if it does turn into an eventual loss, you've gotten rid of some shares at a higher price, and therefore if it goes back below against you, not only did you lock some shares in at a higher price, but your loss is less because you have fewer shares when it goes back down. So I'm a huge fan of phasing. All right, so today it is down again. So it's tough to take those losses, but the next day if they go down more, you feel a lot better about it, right? Okay, so nothing on Amgen at the moment. I might consider buying Amgen see how we're at 29.73 on the, 29.70 on the RSI. I would consider if we close back above the 30 to get back in. So I'll mark that, but we'll see what happens. Okay. Amazon had that big down day yesterday. We've attempted a rally, but we're attempting a rally back into a large downward position, this large downwards bar. I'm not completely sold on that. I certainly wouldn't be buying this here. Where would I feel good about buying Amazon? Close below the 20, close back above. That might be interesting as well. But currently right here, it's just range bound. It could go either way. So I'm not going to do anything with Amazon today. So Boeing, we had that big down day yesterday. Again, do you see the big down day? And then now do you see the rally that comes about halfway, back halfway of this big down bar? That's concerning to me. And what's also concerning is that you have the 200 day. This 200 day acted as support for a long time. And now yesterday we broke down like a hot butter through knife. Now we're attempting to rally. And there's, to me, there's two things going against Boeing. One, we've rallied back to halfway of this bar. And two, the 200-day moving average, which used to act as support, will now act as resistance. So I don't want to get involved in Boeing whatsoever. If it closed back above the 200, might be somewhat interesting. But again, we have the trade deadline on Friday, which is like a big event. And Boeing certainly is going to be the recipient of the good or the bad of what the outcome is, because Boeing is such a large exporter. So, Boeing's going to take the brunt of it if it's not good news. So I'm not going to get involved with Boeing here. Alibaba, whew, boy. Alibaba is continuing to go down. It's gone down quite a bit because of this. Of the trade situation. Again, I would have to wait and see whether or not. Let's take a look here. I would have to wait and see whether or not it could possibly get down into the third ATR channel there. That might be interesting, but a close back above the 50, that may also be another entry trigger, but as of right now, there's really no clear signal. All right, Caterpillar. Well, we did close we closed below the 200 yesterday, so it lost the 200 support, and today it attempted to rally back up over the 200, but currently it looks like it is now below. Again, this 200 acted as support. Now that we close below, it's going to act as resistance. So where would I be interested in Caterpillar? Possibly if we got to a 30 RSI, we went down under a 30 RSI and then closed back above. So nothing on Caterpillar at the moment. Canopy growth. Well, we did have a nice move up. We've had a pullback, which is normal, back into value. This is setting up nicely. What I would really ideally like to see is, see the nice move up, the pullback. Do you see how now it's caught support? It's starting to move sidewards. It's in price discovery. Buyers and sellers are trying to figure out what the correct price is. But the positive is that it did stop going down. The bar started to narrow. So if tomorrow, for instance, we lost support, went down, and immediately reversed back up, triggered a V1 or V2, that is where I would be interested in buying. I really like this pattern. When we have a nice up, we have an orderly down move, we start to move sideways, we attempt to go down, and immediately it reverses. So that's one of my favorite patterns. Nothing today, but let's keep an eye on this going forward. So Cisco, as with everything else, we lost major moving averages. Now this used to be support. See how we found support this first day and it bounced right off and then it closed down back below. It would be possible if it closed above the 50-day moving average to take a position. I really don't like how strong these bars have come back down. And also, if we do close above the 50 today, we're probably going to be in halfway of this bar. We'll see. We'll see. If I did, at the very most, I would take a half position. But we don't even know if it's going to close above there. The Dow Jones Industrial Average, did lose the 50. Now it is closed back above the 50. You know, I could buy this here just using the 50-day as my my stop. It wouldn't be the worst in the world. I do want to show you something though. I'll show you what an actual back test of the diamond, and this comes from ETF Replay, and I'm using this by permission. But if we plug in diamond and we base it off the 50-day moving average above below, you know, let's look at the results. Well, not so great. You know, holding the SPY, you would have made 259.8%, and you would have lost 51.9% on a drawdown. But using the 50-day just based upon the SPY only returns 63% compared to 34% on the drawdown. So less drawdown, but much less profit. So, you know, that's not a good back-tested system for me. If we use the DDM, which is the double leveraged Dow, you can see it's not closed above the 50, but you can, let's see, you can see the results are much better than the DIA. So if we switch it to DDM and then we look at the results, I mean, they're better. They're certainly better than the buy and hold, than the diamonds, but I just don't think it would be something that really shows good enough numbers for me to get involved. Now, on the other hand, if we came down on the DDM, closed below the 200, then back above the 200, and if something happens with this trade deal, it's very likely we're going to go down there. But let's look at those results and see what those results tell us. So if we base the DDM not off the 50, but off the 200, look at those results. 325% using the 200-day moving average, compared to buy and hold only 271. So definitely better on the return, but look at the drawdown, only 28% on using the above below off of the 200, and the buy and hold 81. So these numbers work out really, really well. And so I will definitely be looking for a close under the 200 and a close back above the 200, because not only does it outperform buy and hold of the DDM, it also, the drawdown is so much less than the drawdown of buying and holding. So that's what's nice about using these back tested programs, as you can see. It doesn't mean it's going to happen in the future, but I'd rather base my decision off something that did work in the past than didn't work in the past. So that being said, if the DDM does close below the 200 and back above, that will be a great entry point, good risk to reward ratio. But the close back above the 50, I don't think I'm going to take it because it does not back test well. So, all right, I hope that made sense. Dexcom is not really doing anything here. For me to get interested in Dexcom, I would probably have to have some kind of move down test of this bottom at a low RSI. That is where I would get interested in Dexcom. eBay. Well, eBay did gap up after earnings. It has held pretty well, especially considering what the market's done. It did trigger a V1 today. Did you see how this bar took out this bar, and now this close is higher than this close? It didn't wash it out very much, but it did wash it out some, and it did reject the 20-day moving average. So not bad. 53.16 RSI. That's not bad as well. So it's a potential. Let me run some numbers on that really quick. So in case at the end of the day I may buy it, depending how it works out. But the end of the day might look a whole lot different than it does right now. So again, I feel like the smart money moves the price to where they want at the end of the day, or that sounds kind of conspiratorial, but that the large money moves it to the correct price. So anyway, we'll mark eBay as a possibility. Let's look at this on the weekly. So on the weekly on eBay, we had this big bar up. Earlier I was talking about holding the halfway mark. It has held the halfway mark like it often does, so that is positive. I like to look at stocks on 2 time frames and see if both time frames, have some positive attributes to it. So this does look okay on the weekly, being that we've had this big down move in the market. It hasn't really come down that much. It has held the halfway. It has held the 5-day. And then when you switch to the daily, we've rejected this 20-day moving average twice. So, and RSI is 53.16, very close to a cross under. Yeah, and did have a little bit of a crossover under on the MACD lines, but it's possibility. So let's mark that. Etsy has earnings after the bell today, so I expect this to move pretty strongly one way or the other, but I never get in front of earnings, so I cannot put this on my possibility list. Let's see. Facebook, it's had a bit of a rally today. Not much, 54 cents, and it's had problems again with the half of coming back up to halfway of this downward bar and the 10-day moving average. So I hope that makes sense. I really look at that. I really like to see whether or not, if something goes up, if it can hold the halfway point, or if something goes down, if it can go up above the halfway point. So 5 below, it's getting a little beat up here too with the China stuff. Did rally today, but was not able to get above halfway of this bar, at least not yet. This is the Swiss franc. It is getting a little interesting in that we have a bottom here. We tried to rally. We tried to test that bottom. We didn't see the depth of the red bars on the way down. And then we came down close to testing this bottom. No red bars. We do have a positive MACD. So that's it's getting somewhat interesting. Probably for me, I would first of all two things. If it closed under the 30 RSI and then closed back above, that would be an entry signal for me down in this range. If it can close back above the 10-day moving average, that is where I might be interested in this on the upside. So sometimes a price is just right in the middle. It either has to go lower or higher to signal an entry. General Electric, we did move up to the 200-day moving average. It did close above it. Then we lost it yesterday. And, like I've been saying, when you lose a major moving average, and when you lose it to the downside, then that moving average is going to become resistance above you. And with a lot of other stocks I've shown you today, we have rallied, but we have the resistance of the 200 above us, and at the same time it comes halfway of this bar. Gold did gap up today, reversed. I'm looking for a 520 EMA cross, and if we look over here on GLD, and we look for a 520 EMA cross, you can see that 106% using the system compared to 184 of just buy and hold. So yes, buy and hold was better, but look at the drawdown. The drawdown was 45% buy and hold, where this was only 21.6% as well. So yeah, if we get across above, it's a proven, back tested, profitable system. Doesn't mean it's going to be in the future, but it has shown in the past. So I will be waiting for a 520 cross. Google is just kind of stuck in this range. Here's another example I'm going to show you, but I'm waiting for either Google to go above the 50, close above the 50-day, or close back below the 200 and back above. And if we take a look at those, if we base this off of the 50-day simple moving average, you can see buy and hold was 1,144%, but it also had a 65.3% drawdown, where if you use the 50 as your line in the sand, above you're in, below you're out, it still returns 727.3%, and the drawdown was only 24.8%. So, those are good numbers to know, right? So that is on the 50, if we close above the 50. If we close below the 200 and above the 200, let's look at that quickly. So we'll switch this from 50 to 200. And we'll take a look at those results. 258% return compared to 570 versus 34.3% drawdown compared to 65. So, buy and hold did make more, but using the cross, or the close below the 200, back above the 200, it still returned a nice 258% with half the drawdown. So either of those, a move back above a close back above the 50-day moving average, or a close back above the 200, is where I would take a look at getting into Google. Goldman Sachs, I did buy Goldman Sachs here when we had this close above the 200. I used the 200 as my line in the sand. We had this higher low going into the trade, and higher low is when the previous low is higher than the low before it. I do have a video on my YouTube channel where I talk specifically about higher lows. So if you have some time, go to the channel and watch that. They're really important to my trading. That being said, it did not work out. It was frustrating because a close below the 200 where I was going to get out. Well, Monday it gapped lower and then just barely stayed above the 200-day, keeping me in the trade. Boy, do I wish it would have just closed a few cents lower. I would have been out, still for a loss, but much higher, and it kept me in. And then yesterday we had to get out of the trade because it did lose the 200-day moving average. So you never know what's going to happen. It's important to position size correctly so that when you do have a loss, or a string of losses, or a couple of weeks of losses, they're small losses and they don't get to you emotionally. So it's important to always position size correctly. 5% position size, 10% position size, but you know how a lot of people do it. They're like, I got 100 grand in my account, I'm going to buy $60,000 or $70,000 worth of this stock. No, you should be buying $5,000 or $10,000 at the max. But it did try to rally today. It's actually lower today. So nothing there. HCA, we did have this big bar here, and I just, for illustrative purposes, want to show you when you have a big bar up, it should hold the halfway of this bar, and it is, right? So you have halfway of this, it's currently about halfway of this bar, and it's also currently holding these moving averages. Doesn't mean I want to buy it here. It's just kind of a good illustration that it is somewhat healthy. For me to get interested in this, I would need, most likely at this point, just to close above the 200-day to the upside, or a retest of this bottom down here with possibly a 30 RSI. That would be the smart way to approach it. IBB, I did get into IBB when we had this nice close above the 100-day moving average and this fractal. Fractal is when you have two lower highs to the left, two lower highs to the right. But MACD went positive. Lots of good signals on this, but it just dumped yesterday and I had to get out. It's rallied a little bit again today. But again, illustration, big down bar. See how we've come about halfway. Came down. We've tried to come up to halfway of this bar and it's failed. So that's a recurring pattern. Oh, Intel. So Intel, I did get above here. It was a good entry. We closed below the 100-day moving average, back above the 100-day moving average. We had a V2 entry. Everything looked good, but we did lose the 100-day moving average yesterday, and that was my stop. And it was a small loss with potential of a large gain. Would I be interested in getting back into Intel? Possibly. Possibly if it closes above the 100-day moving average again. So let me just do some numbers on that real quick. In case it does close there at the end of the day. It's always important that if you've identified a stock that you may want to get into, write the numbers down so you have them right away, because sometimes you get close to the end of the market and it's hard to keep everything straight. So I like to just have it right in front of me so I know what I'm doing. So would I be interested? Possibly with the close above 50.89, because that's the 100-day moving average. So okay, so we've marked that. IWM not doing much. Close below the 200, back above would probably be where I would be interested in there. Johnson & Johnson. Hey, Ramble Rod. Hey, how you doing, Ron? Glad to have you here. Johnson & Johnson did bounce off the 20-day moving average, but yeah, I honestly feel like I'm a lot more comfortable buying things to the downside right now. Things have not been able to go up and they've been sold into. So I'm going to kind of turn my attention to the dip buying. Not that if it doesn't go up, I may, that I won't buy something with momentum to the upside, but we haven't been able to go very high lately, and everything that's gone up has been sold into, even today. Coca-Cola, it looks decent. We have moved up nicely. We have had an orderly move back, which is nice. We have tested the 20-day moving average twice. At this point, I would really like to see it try to go down, get rejected, move back up, create a V1 or a V2 to the upside. Alternatively, a close back above the 10-day moving average might also be interesting, but as it is right here, right now, today, nothing. Lockheed did bounce off that 10-day moving average, the pink line. It's a 69.35 RSI. It's too high. Okay, MasterCard we have. We already talked about that. We'll look at that one more time before the end of the day. 3M did gap lower, lost that 200-day, and just has not been able to rally whatsoever. We're at 20.51 RSI. It's very, very oversold, but it has not been able to catch a bid. No one's really interested, and my guess is when it does rally, people will be selling into it. So nothing on 3M. Little lunchtime trading, sweet. Altria, I was waiting for Altria to close back above this 200-day moving average, giving us a higher low. Now we've taken out that previous low. Now we're in lower low mode again. So for me to get interested in Altria, the very least close below the 100-day moving average, close back above, or a totally different look at this would be a close back above the 200-day moving average. We did have a golden cross in the last couple of days. That's when the 50-day moving average crosses over the 200-day moving average, and that is a positive signal, positive long-term signal. Doesn't mean immediately it's going to go up, but that is something positive. So a close below the 100, close back above, or close back above the 200-day would be my signals, or a close back or close under 30 RSI and close back over 30. Merck, I did buy Merck here, back on the 30th of April. We had this move up. This is about where it should start going down. It did, and then it had earnings. It stabbed down and then immediately reversed back up, showing to me a trend change. I was able to phase out, I can't remember now, I think it was 25% or something of my position up to here. because it started going my way, then I don't want to give back all the profits. So I had to pick kind of my line in the sand for my trailing stop, and it was the 20-day moving average. And then we did close below the 20-day moving average. So I did have to take a loss. All in all, it was a very, very small loss because I did phase out some to the upside. And so I didn't have as much when it went down. So it is rallying today. But it is right in the thick of that halfway of that large bar. So I just have to let this play out and look for another setup. Microsoft, again, we've had this big move down. This is higher than halfway of this bar, so that is somewhat positive. But for me to get interested in Microsoft, I really would have to have this move sidewards, go down, get rejected, move back up. That would be my signal. Let's take a look here. Netflix. Well, Netflix is not participating in any of the rally today. It has gone below the 50, back up above the 50, which isn't bad. But again, we have this big looming bar over our heads. So I would really need to have a close below and a close back above in order to get me interested in Netflix. Nike, we did have that confluence yesterday where we went to the 100-day moving average and we were very close to the RSI, the 30 RSI. This looks tempting. This looks like a V2. See how day 2 went lower than day 1, and then day 3 actually got above the close of day 1, but it really needs to close there to be valid. So it's a 38 RSI, giving me a profit target of 30, which gives me 12 points to the upside and 8 points back down to the 30 RSI. So I'm just going to wait on this and see if I can actually get a better signal where I have a close below the 100-day and or a close below the 30 and back over. So I'm just going to be conservative here and really look for a great, a really good setup that gives me the very most possible reward with the smallest loss. So, I mean, it could just go rallying from here. I don't know. But that's my plan. It closed below the 100 and it closed back above. Philip Morris, not doing much here. It has held the channel, which at least is positive. If these bars could get down to here and challenge this low, we're going to have one heck of a divergence, a bullish divergence. And a bullish divergence is when the first low, you see how deep these red bars are. MACD is momentum, so very strong momentum to the downside. We had a rally. Now, if we go back and test this previous low here, do you see how this is not even it's an eighth of the distance of here, so it's very shallow, meaning that momentum is slowing. So if we could get down here with the bullish divergence, that would be a really good entry signal. I studied one-on-one with Dr. Alexander Elder. He wrote Day Trading for a Living, and it was really a legend. And I studied with him one-on-one, and I learned a lot. And this is his favorite setup, a double bottom with the bullish divergence. He feels like it's the strongest technical indicator for getting into a trade, both to the long side and the short side. So I imagine if he saw this chart right here, he'd go, oh, very interesting, but it's not there yet. It would have to get down, either test this bottom or go lower. But if it did, we would have a bullish divergence. And on top of this, cherry on top of that is that we're in the third ATR channel and the 200-day moving average. So right down here, to me, would be pretty sweet. Pretty sweet. I may even consider selling a put down there because I would get the premium if it doesn't go down there. And if it does go down there, I would get the shares. But that looks like a location where I would want it anyway. PayPal, it's okay, but At the very least, I would need this to be a V2, and a V2 is we have 3 bars, day 1, day 2, day 3. Day 2 has to go lower than day 1. Day 3 has to close above the close of day 1. So it would minimum have to get up there, and it doesn't look like it's going to do that. The Qs, it is holding the 50 RSI, which is positive. But again, look, we're right in the middle of the halfway of this bar. Makes sense? Oh, okay, Ron. Thanks for checking in, buddy. Appreciate it. Hope you have a good rest of your day. So yeah, big bar down. We've rallied halfway. Yeah, I mean, that's just the same with a lot of the stocks today. Silver, I would have to wait for a 520 cross. We did the back test on gold. The silver also back test profitably when you get a 5 crossing over the 20-day moving average. I see your question, William. I'm going to answer that after the market closes just because I'm running a little low on time, if that's okay. So as soon as the market, in 15 minutes, I will answer that so I can give you a good explanation, but I'm up against the clock. SPY, we'll be buying the SPY today based upon the overnight SPY trade. All right, Square. This is a good example of going up. Are we holding the halfway mark now? I would say it's a little under. Yeah, I would. The only real trade I see here right now would be a close under 30 and back over 30. AT&T, I'll tell you what, I do, the move down has been pretty orderly. I really like to see this close under the 200 and then tomorrow buy it if we have a close back above the 200. We currently, if it did do that, we would have a higher low here also. So not right now, but we'll watch that again tomorrow. Tesla, oh, sorry, no, that's bonds, did open higher, reverse pretty strongly. Tesla, if we had a move down tomorrow and then back up, giving us a higher low V1 that reject the channel with the positive MACD, that would be interesting. UNG, boy, I was talking about natural gas back here that I thought that was a short-term bottom. It sure was. To be interested in here, the only thing that would give us a signal at the moment would be a close back above this previous high, giving us a fractal to the upside, 2 lower highs to the left, 2 lower highs to the right. And then would also put us back above the 50 RSI. So that might be good in the coming days. UNH, no, nothing really. Oil, well, it's a possibility. We did close below the 200, back above the 200. Let's take a look at the weekly chart. The weekly did reject the 10-day moving average on the weekly, which is positive. We have been into an uptrend. This is a normal pullback on the weekly. On the daily, we have closed underneath the 200 and back over. So yeah, oil looks somewhat interesting for the end of the day. The dollar's just moving sideways. Visa just undecided, pretty much waiting for Friday. Verizon, it's doing kind of the same as AT&T, but I like AT&T better. Energy Select, I did buy that here when we closed back above the 100-day, and we also came back above the 30-day RSI. Yesterday I did have to get out, but luckily I wait till the end of the day, so I did not have to get out down here. Narrowed the loss quite a bit. So right now, what is that? 63.81 is the 100-day. Well, that's a possibility. Consumer staples, no. Real estate, halfway of the bar. Healthcare, no. And transportations, no. So quickly, let's take a look and see what our potentials are today. Amgen, no. Cisco, no, it would have to close above. Diamond, not going to do that. eBay, currently right now it is not a V1, but I could pick it up for V2 tomorrow. Swiss franc, looking for a double bottom or a close under the 30, so I will at least keep that on the board. Google is in no man's land. Intel, ooh, we must have had a sell-off here because that was close to going above. It may get below the 30 and back over. AT&T, no. Oil and energy.
Order filled.
Let's look real quick and see what the markets. Oh yeah, the markets gave back a lot. Yeah, they have really sold off now. Well, that's how it goes. Okay. You know, the only thing that looks good to me right at the moment, possibly Intel. You see how we're under 30? So Intel, and USO. But I'm going to have to watch them to the very, very end. Okay, so that gives me our possibilities here. 10. Okay, so I'm going to go with oil, USO. Okay, so Intel did get under 30 and now it currently it's above 30. So within the next 8 minutes, if it's able to hold, that will be my signal. So let's take a look at my other current positions and see, do we need to do anything with MasterCard? No, we don't. A close below the 20 is going to be our stop on MasterCard. We're going to, or I am going to, again buy the S&P at the end of the day. You know, the market was up pretty big earlier and now it's given it back. So another reason why it's a good idea to wait for the closing price, right? Just wait and see what happens at the close, because that's the lie detector hour of the market, because everything that's come before during the rest of the day really doesn't mean anything to me. It's the price of the close. All right, so Intel was under 30. Now it's back above 30. It also did bounce off of the 250-day moving average. Let me check something real quick. Hang with me. Okay. All right. Now it is back under. So here's oil with the close back above 200. But you can see on the weekly, you know, we did move sideways, we did move up. We've had a retracement, but it's 50% of this move. It's holding the 50% of that move. It did bounce off the 10-week moving average. So that's good, right? That's good. MACD is positive. It's negative here, but I do like to close below and then back above on oil. So MA looks fine. We did hit the one profit target. SPY is now negative, but we will be buying that. Better than buying it up here, right? Intel is going to be holding that 30 RSI. I mean, if it's going to, that's the key to me. And then oil. So we have 5 minutes left. Let's take a look at the S&P intraday and see what that looks like. Oy vey. Yep, big move down. You know, we rallied nice and then a bump and then a big move down. So boy, what an interesting day, huh? I just checked the news. I did not see, didn't see anything to indicate why we went down, so it probably wasn't news related. All right, so we have 4 minutes. All right, so the plan is MasterCard looks fine unless we close below the 200. I am gonna buy my regular amount of shares of SPY at the end of the day. Oil looks fine, and Intel is going to be right on the button. So what I'm going to do is I'm going to go ahead, just because I'm going to have a lot to do at the end. I can't do it all in 30 seconds, so I'm going to go ahead and buy my
Order filled.
SPY position. I trade multiple accounts, so I have to do this several times.
Order partially filled.
Okay.
Order filled.
So SPY is done at 287.74. Okay. So SPY is taken care of. I'm going to go ahead and buy oil. That's USO.
Order filled. Order partially filled.
All right.
Order filled.
Now I'm going to queue up Intel if it does close above. And that's only if it does. All right, so all eyes on Intel. Currently it is below, which if it is below, I will not buy it. So what do we have? We have about 45 seconds. Ooh, this is going to be a tough one. We'll do our best. $29.57. About 20 seconds. Does not look like it's going to hold, does it, folks? Nope. Nope. So we didn't buy Intel because it closed under 30. Well, had a green day today, which I am thankful for after yesterday's beating, but that's how it goes. So listen, before we get into questions and answers, I do want to let everyone know that I do offer private one-on-one teaching and coaching sessions at nighttime via Skype, and I have had really good success with my students, working one-on-one with them. So if that's of interest, my contact information, my hourly rates in the description of this video. And then also, if you found today's video interesting, or if you learned something and you appreciate it, show me by hitting the thumbs up button. I would appreciate it. It helps with the rankings on YouTube. And also, if you would share it with somebody, let people know about the channel, share it on social media, or hit the subscribe button if you haven't subscribed to the channel. I would also really appreciate that as well. So if anybody has any questions, I know William had a question, so let me get back to that and take a look. Okay, so William asks, hi Greg, do you prefer to take a V1, V2 entry near a moving average, or would that formation by itself be strong enough to take an entry given the RSI is above 50 or near above a 30 RSI? So example RH, am I doing that correctly? Oh, RH or XLE. Do I prefer to take a V1, V2 entry near a moving average, or would the formation itself be strong enough? Okay, so the more indicators that you have that line up, the better. I mean, if you have something that does a V1 or a V2, triggers you into a V1 or V2, yes, by itself, that is strong enough, but it certainly would be better, William, if at the same time that it triggered a V1 or a V2, that it also rejected the moving average as well. So like here, RH, Restoration Hardware Holdings. So, yes, that's a V1. Well, technically not, because it did not close above the close of the day before. And it did wash it out a little bit, but this would be a much better signal if like the 20-day or the 10-day or the 50-day was under it as well. So yeah, V1s, V2s by themselves are strong enough, although there's places that are better to take them than others. If you had a V1, V2 and it was down in a 30 range, good. If you had a V1, V2 that went from under the 50 back over the 50 at the same time it triggered a V1, V2, better. Right here at a 3581 RSI, kind of in the middle, I probably wouldn't take it just based upon that in that location. So you have to think about what the context is of what's going on. But I mean, obviously, the more indicators that happen at the same time, the better. Let's look at your other one, XLE. So, this was close to having a V2 today. Here's day 1, day 2, day 3. Day 2 washes out day 1's bar. Nice washout. It's good, right? But day 3, did it close? Day 3 would have had to close above day 1's bar in order to be a really a legitimate V2 entry. But if it had, look, I can manipulate this here. Wouldn't that be sweet if I could do it in real time? Look at that. Magic. But if it did this, William, it would be awesome, because not only do you have a completely legitimate V2, here's day 1, day 2, day 3. The V2 is day 2 going below day 1, day 3 closing above day 1. That is a beautiful, completely legitimate V2. But at the same time, it also happens over this 100-day moving average as well. And throw in the third ATR channel as well. So you rejected the third ATR channel, you rejected the 100-day moving average, you had a V2 entry. So that would be ideal. But look at this now here compared to there, right? It got close to triggering it intraday, but that's why I wait till the end of the day. So we don't have a V2 and we close under the 100-day moving average. Does that make sense, William? Does that help? Do you have any other questions on that? All right. Does anyone else have any other questions about today's activity? Well, like I said, I'm glad we were able to paint a little green today. That's nice. Just take it nice and slow. Don't try to make things back all in one day. It never works. Promise you that. So, and even if it does, even if you do make a big stab at the market and you actually get super lucky and it does, then it's not good, because then you're being influenced and reinforcing bad behavior. You know, somebody that starts off trading, it's probably better that they lose money right away, because then they become scared of the market. And that's really where I want people. I don't want people to get cocky and think, hey, this is easy. It is not easy, right? It is not easy to trade. It is very, very difficult. And you really have to have all your ducks in a row, do exactly what your plan is, don't deviate, and mainly battle yourself. You're battling yourself. You're battling your ego. And, you know, I've been doing this for 23 years, and it's not about the hitting the enter button or entry button or some secret trading system. Nothing to do with that, folks. It has to do with your mind, and it has to do with battling yourself and not letting ego get to you, not getting too depressed, not getting too euphoric. I mean, that's really what it's about. I can't stress that enough. Okay, well, if no one has any other questions, oh, good. Okay, hope that helped, William. If anyone has any other questions and you're not able to answer them here, you know, feel free to email me. I'll do the best I can to answer them, and my email's in the description of this website. So, listen, I hope everybody can come by tomorrow. Should be interesting during the last hour of the market. And as always, I really appreciate you coming here and spending your time, and I hope it's helpful. So thanks again. Have a great rest of your day. And on the way out here, I've got to play the U.S. government required disclaimer. So have fun with that, and we'll talk to y'all. We'll see y'all all tomorrow. Thanks, everybody.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation, and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.